My name is Damali Ssali and I welcome you to this episode of the Ideation Corner. The Ideation Corner is a space where ideas are discussed and dissected. And today I host John Mark Ssebunnya. Mark was born and raised in Masaka, which is 120 kilometers from Kampala. He completed his first degree in computer science with first-class honors. He holds a master's in engineering, which he completed with distinction from the University of Raj in Brussels, Belgium. Mark started off his career at the Bank of Uganda, then he moved to MTN Rwanda and MTN Uganda. And in 2018, he moved to the MTN Group. At the MTN Group, Mark leads the evolution of the group's financial technology platform. And he speaks both French and English. Mark is passionate about contributing to improving the lives of Africans, and he has made deliberate choices to work towards this goal by supporting and taking part in initiatives that are part of the digital inclusion and financial inclusion. Mark also wants to leave a legacy of a big African brand that is High People, which is going to impact and contribute to the lives of poor people. So today I'm very happy to have Mark in my Ideation Corner. Mark, you're very welcome and thank you so much for speaking to me.
I'm glad to be at the Ideation Corner. Such a privilege. Ideation is a very big word in its own sense. Everything is an idea until when it's realized. I do hope that the ideas that are shared, the views that are shared, get some implementation in some space. I'm very glad on the introduction you've given me. I don't think I can even introduce myself better than that. I'm honored.
Thank you. So having gone through your profile, I think you're the one of the few people in the world who can authoritatively talk about financial inclusion on the African continent. So if you may, please give me at least what the current state looks like.
Financial inclusion in Africa is something that is growing well, if we can say what's the current state in very simple terms. It's something that is growing well. Summarizing it in one sentence or in one paragraph is not that much possible, but I will give a bigger context. Why do we talk about financial inclusion? We do have a state, maybe 20 years ago, whereby there was realization that for us to develop, we need our people, the bottom of the pyramid, who are largely unbanked, to be able to access financial services. Now, banking has been here in Uganda, in Africa, for over 100 years. There are banks that we can talk about that have been on the African continent, particularly, for over 100 years. While banking has been here for over 100 years, we do have a situation whereby 20 years ago, 15 years ago, if you come to a country like Uganda, you go to a country like Cote d'Ivoire, you go to a country like Gabon, more than 70% of the population was not formally banked. Formally banked doesn't mean that these people are not holding money, touching money, using money. Money has been here since before Christ in different forms. And what is money? Money is, can be interpreted as a store of value, a means of payment, an element of trust in a transaction. There are stories about communities who look at money, and you go to the community and they tell you, you know what, so-and-so owns that tree there. And this tree has this kind of value. The moment you go and touch this tree, you benefit like this. It's money, in a sense. It's a medium of exchange. They're putting trust in a tree. There are stories whereby they tell you of communities who talk about rocks. Someone says they have rocks somewhere in the water, somewhere under land, and then they tell you this family is in charge of these rocks. We've entrusted them the value of these rocks. Now, this is money. It has been existing in very many different forms. to the case whereby many of us are used to what we call fiat currency. Fiat currency is you are looking at the paper money, the coins, which have been of recent. Now, the people that we do have across the African continent and everywhere in the world are accustomed to the use of fiat currency. But it has been happening for so many years whereby this is informal. Informal in a sense that these people don't have what we call bank accounts. Now, there is a trust around money as a mode of exchange, whereby people, as long as they know there is this fiat currency, say $100 or 50,000 shillings in Ugandan money, or 1,000 Kenya shillings, if you give the person this paper or this coin, there is the bit of trusting that currency. So the people do these exchanges. Now, the element comes in and you realize that, okay, while there is money circulating, many of our people can't go beyond the day-to-day transaction. I'm selling my cow, I'm selling my chicken, I'm selling my potatoes to get an amount to run me the next day. But then you realize that there are social needs. Children have to go to school. Their health needs, people get sick, they need treatment. There are basic needs in houses, like power, like water. People have moved away from use of wells. Many have migrated to the towns where you can't own a well like it previously was. So you need piped water, and this you need to exchange for something. So you come to a realization that many people have not got these essential services because, one, they're either not having money, but even when they have the money, they don't have the right means to save, to borrow, to extend their capabilities. Because when you save, it means you've saved maybe for a bad day. A child gets sick at home, then you are able to use part of your savings. Or you earning money and then you are saving, you get an insurance. Someone gets sick, you are able to get an insurance policy. So many people have been excluded from these services. Now, financial inclusion is looking at bringing people into the financial ecosystem, but the ultimate goal is not just bringing them into the financial ecosystem, better their lives. Let these people be able to access education. Let them be able to access the basic needs in the house, water, electricity. Let them be able to access health services. And what ties them all together is the financial inclusion element. Now, when you say financial inclusion, there are a couple of words that come into context. We talk about access to financial services. Is someone able to access a place where they can deposit their money, withdraw their money, or make a payment? Is someone able to do that? Is the service being provided affordable? In a sense that while I could be able to, for instance, pay for bread at a supermarket with my cash, which I exchange. You tell me this bread is 5,000, I give you 5,000. When you tell me to pay with it with digital financial services, am I paying extra? 5,000 becomes 5,100. Is it worth for me to use the service? So affordability comes in. So access, affordability. Then you look at also the value. What I mentioned earlier is the value. I need to send my mother in Masaka. You introduced that I was born in Masaka. I need to send my mother 100,000 in Ugandan money. Is it worth it for me to spend 5,000 and send the 100,000? Or is it better for me to spend 5 hours, get on the road, drive, or in a taxi, and then go and give this money in cash? So that's the element of the value. Because people look at, okay, what's the value add here? What's the value proposition? I do a digital financial service. What's the cost benefit? Is it costing me more? So affordability and value come kind of close. So in a nutshell, financial inclusion is how do you get people to access for more financial services in an affordable way, but also adding value to whatever they are doing. once you get into that realm, then you can start to look at how can all these other services that better the lives of the people be enabled with financial inclusion at the heart of the transactions. You're paying for electricity, you're paying for water, you are doing your school fees payment, you need health insurance. How do you use financial services to enable this? Now, in Africa, many times when we talk about financial inclusion, we've talked a lot about what we call mobile financial services or digital financial services. Africa as a continent is a continent that I would call mobile first, whereby we historically have had a lapse or a lack of infrastructure like telephone cable, and then it's a huge continent. You go to a country like Congo, you find it's big, sparsely populated, forest, so the infrastructure there is a little bit challenging. But luckily, mobile came in. When mobile came in, then you realize that you can communicate to someone 200 kilometers away with a phone call. We've had this for 20 plus years within Africa, and of course, a longer period across the world. So you realize, okay, you can communicate to people using a mobile phone. Then it so happened along the way that sometimes you put out a service like a mobile service with one intention, but then people realize they can use it for something which wasn't intended. The typical case here is when mobile came in, people were buying airtime and then of course doing calls. Then because there was the need of moving money across Africa families, one thing around Africa is that our extended families are close. When a child grows up, they don't kind of close links with parents, with their siblings. They keep very close to support each other. So you come to a realization that a child like me could have left Masaka, came to the city, and then I need to send money home. Now, people realize that, okay, I'm buying airtime of 10,000, over 100,000. Why don't I buy this airtime, send it to an agent store for someone close home, send 100,000 airtime, tell this airtime agent that, you know what, let my mother come, give my mother 90,000, keep the 10,000.
Oh, that's how it started?
That's how it started as an idea. Yes. Wow. So people first looked at airtime and all of that, then figured out a way of how they could actually do kind of money movement using airtime. Now, when they realized that the inventors of mobile telecommunication didn't have this in mind at the start, but now the market needs, the people have diverted to use airtime for a financial service. That's when now innovators realized the element of the ideation here. Realized, you know what, there is an idea here. There is a need, people need to move money. Now they're doing it in a way via airtime. Why don't we try to do what we call mobile money in a sense, and then move money electronically within mobile networks. So mobile telephone operators, M-Pesa in Kenya, started the mobile money the way we know it. Of course, it's Vodafone Group, Safaricom. They did some lab tests. They did some kind of pilots. There was elements of the global kind of development players who are interested. They did lab tests, they did pilots, and they realized there was something magnificent. So mobile money starts, M-Pesa grows. It comes to markets like Uganda, I think that should have been 2008, around that time. And now you have something like mobile money and digital financial services in so many parts of Africa, and of course elsewhere in the world. Now, mobile money in itself is a form of a digital financial service. So coming to what I said about money, you have money, the store of value. Then you do have a payment instrument, and then you also have things like channels. So you have a store of value which essentially has been kept to be in the current setup, the store of value is largely money at bank. There are other stores of value, but broadly, stores of value have still been money at bank. Now you come in with digital money, e-money, which is coming in like with mobile money. You have money at bank, you have money in an e-wallet player. So then you get a payment instrument like debit cards, like debit and credit cards, of course, even our mobile money kinds of payment. They come in as payment instruments. Then you come to channels like USSD, channels like the web, and of course the ATMs, which we've known previously, and even at the teller. All these are kinds of channels. Now, the financial inclusion element then brings all this together. You have now a diversification of payment instruments, because mobile money, digital financial services done by different fintechs has now diversified the payment instruments. Now you have a diversification of channels. So you have mobile as a very primary channel, you have point of sale terminals, you have ATMs, you have debit and credit cards that are all being used. So you have a diversification of channels that are being used in the market. What does all this do? What it does is that it has created an environment whereby people who were previously excluded from formal banking can now, off their phone, get a bank account. You no longer need now to go to Standard Chartered or to Stanbic or to any of these other banks physically to get an account. You either do it digitally at the bank application, or you can do the very same through a mobile channel, like via one of the mobile money providers. It could be MTN, Airtel, Africell, Orange. You can create an account. They've enabled through their channels, they've enabled means to create an account. So you get an account at the bank. So you are financially included. Now, once you have financially included, I put that in quotes, because creating an account in itself, from the definitions now of usage, accessibility,
affordability.
Yeah, affordability, creating an account is not enough. You need to create an account that you can use. So after you've got the account, now the next question comes in to be like, how are you using that account? Do you receive money to the account? Maybe you are selling goods. Let's assume you are a merchant in a market. You are selling tomatoes, oranges, onions. How does that money come into your account? Or you are doing a service like you are a builder somewhere. You're part of a contract. You are contracted to come and do a service. Maybe it could be manual. You're part of the team that is doing the work. How do you get paid? So now there is the element of people have created these accounts. Literally, you bring them in the form of financial fold, but what are they doing with these accounts? Are they using them? Now, government to person payments become important, whereby government is a big payer across the ecosystem in Africa and elsewhere in the world. So there is digitization to be like governments, development partners. If you are moving money, move it through the digital financial ecosystem, and this money gets to the people to receive it on their accounts. Now, when they get it on their accounts, how do they use it off their accounts? Then the element of merchant payments. I need to be able to go to the store there where I want to buy milk and then pay with my digital financial service, my account with the telco or with the bank or with an MFI. I should be able to make that payment digitally. So then that brings now the movement of money within the ecosystem, the digital ecosystem, because we are at a stage whereby there is a talk around what we call cashless economies, which I prefer to say cash-light economies, because cashless is the end state, but that end state is still a little bit ideal, because the attachment to physical money is like a social attachment, whereby you may not completely pull out and say, at least not in the short term or medium term, that there will completely be no cash. But we can drive what we call cash light, whereby we come from a cash full economy whereby everything is cash. We do these digital financial services. We include more people, everyone, at some stage into the ecosystem. Then we encourage the use of these digital financial services. So we gradually reduce
of cash available.
the amounts of cash that are within the ecosystem. And for that to happen, the element of what I've called merchant payments becomes important. Someone got money, they should be able to go to the smallest of their store. They're buying milk, they're buying fish, maybe they're at a port somewhere, a landing port, they're buying fish. They should be able to do this with a digital payment. Once they do this with a digital payment, then we shall be able to see more around a cash-light movement.
Okay.
We have a trend that many people who receive money, P2P or being paid, you're moving to cash it out. Why are you cashing it out? Because then you want to go to the shop and pay for your bread, yes. So there is a big opportunity here. There is a big opportunity where fintechs come in. Because for us to drive now cashless agenda via the cash light movement, then we see that there is opportunity. Are you doing agriculture, for instance? Are you doing fishery? Are you doing construction? Whatever industry you look at it, healthcare, medicine, look at your business, see what can be done to enable this business to operate more digitally. Now, for it to operate more digitally, you can decide to say, okay, maybe my shop, which is selling fruits or milk, I can put a page somewhere online, tell people you can order, and then you order and make the payment to me using a digital wallet or a digital financial service. So you have an idea there to digitize that stream. You are doing education. We've seen during the times of COVID, whereby schools are shut for inevitable reasons. But I mean, students need to keep learning to grow, because education is part of their growth. Now, you will be able to say, okay, we're going to provide a package, a digital education package, subscribe to it, and then make the payment from wherever you are using your digital financial service. Now, this enables people who are now home to get the education. You don't need to have gone to a bank to now access this service. So coming to what I said earlier, that the element of financial inclusion is at the end of the day to enable people get the basic services, all that they need for their life. You need education, you need health. Okay, let your means of payment not exclude you from getting this service. Even when you would have afforded it, if the means of payment excludes you, you won't get the service. So digital financial services there enable you to be able to access the service more easily. At the end of the day, when you look at it, what we call including everyone in financial inclusion, when you include everyone, you're helping grow the economies. When more people are socially better, they are having education, they are having better health, it means you're going to be more productive as a nation or as nations. Time that has been spent that is unproductive will now be more productive because your people are learned. They can do more production. Times that have been spent because people are sick and they can't get health services is now reduced because the people can now access the health services. People that have been getting problems because they're taking water that is not clean, you now have financial services enabling access to tap water at a subsidized a payment that is done over a period of time. It's not like a one-off capital payment, which is hard for people. People that are children that were getting complications, health complications in kind of breathing because they're using a kerosene kind of lighting in the house, which is bringing in all these gases and impacting the health of these children, is now reduced. Because over financial inclusion, you are seeing solar energy being provided to so many families across Africa at subsidized prices that are affordable over a longer period. So all these effects are coming because of the element that was started, financial inclusion, digital financial services that are being now used all across Africa. So I do believe that people who started this like 20 years ago never saw the end effects, that it would open up all these kinds of enrichments to the lives of people that we do live with and we do serve. So that's really my take around the topic.
Well, you're definitely the right person to speak to, because there's so many aspects that you've dissected that I had no clue. I didn't even know where it began, how the mobile technologies started thinking about money. I didn't know that it came from actually the people who found a way to turn airtime into a mode of transaction and a mode of transfer of value, and that's where it's actually started. So now, having explained all that, where are we as, say, Uganda, for example? Where are we in this cash light process? Are we in the middle? Are we about to get there?
So I would say we are in. I can't quantify it in a percentage terms, but there are researchers that give figures. The researchers that give figures, for instance, in Uganda, the UCC, the Bank of Uganda, gives figures around financial inclusion. They will tell you we have something like 20 million mobile accounts, 20 million mobile money accounts. They will tell you accounts at the bank. So these figures are available. Now, if you look at a market like Uganda, where you have a population of about 42 million people, and then you have around 20 million mobile money accounts, you're literally saying half or all the adult population is having, in absolute terms, is having an account. Now, this doesn't give you the full picture, but it's a positive. We've moved somewhere, because 10 years, 15 years back, you had like less than 20% people having bank accounts, formal bank accounts. Now, literally, you're having like a 50% of people having accounts with in a formal financial institution. Now, formal here comes in with the element of what we call it's regulated. It has a clear process. It has a bureaucracy. Because what would happen informally is that, people, like I said earlier, people used to transact. I could come to you, Damali, and say, you know what, lend me 1 million. You give me 1 million. Now, when I come to ask you, lend me 1 million, you may tell me to explain 10 reasons why I need the 1 million. Sometimes inconveniencing, but if you need something, you do explain that.
Yes.
Now, when you bring people in the formal financial service, then as long as this person has been transacting, you see like what we call micro lending, savings and all that. Someone now can borrow 1 million without having to explain 10 reasons of why they need the 1 million. Now, when they borrow this 1 million, they're borrowing it under a formal financial institution, which is regulated by the central bank, meaning this institution won't do something against the law to claim the 1 million back. Whereas when I took 1 million from you, you might have, if I fail to pay after maybe 1 month or 3 months, if we agreed, you may come and say that, you know what?
I'm taking your car.
Yeah, I'm taking your car because of 1 million, something like that. So now here people are more protected. Because these are formal financial institutions. So we've moved. To your question, we've moved. We have more people financially included. We have more offers to the people from formal financial services. We've seen more savings, more lending. We've seen insurance also coming into the play. Historically, markets like Uganda and many people across Africa have had a skepticism around insurance. Now, with digital, small micro insurance is taking ground. So we are on the journey. Now, the element that we still have to address, remember I said there is access, there is usage, there is affordability. The usage element, we still have quite a lot of work to do. The different players, banks, telcos, are doing a good job. They're innovating products for payments, merchant payments, and putting them out there. But the culture still also has to trust and then to grow with these products. Someone needs to start to trusting that, you know what, I don't necessarily need to go to that supermarket and take 1,000, 2,000 in cash. I can go there with my money still in the wallet, I get the liter of milk, and then I pay with my digital wallet. So there is that journey that we're supposed to move as a society in Uganda. This is not different from elsewhere in Africa.
Okay.
You will find I've been able to, luckily, be in so many African countries. I've been nearby Rwanda, Kenya. I've been far in Cote d'Ivoire, in South Africa. I've been to many of our African countries, Ghana. There isn't a big difference in how we are all dealing with this, with financial inclusion. Mm-hmm. We are all under the same umbrella. We could be at different scale, but our problems, our society problems are the same across most of the African countries. Our means are similar. Some may appear to have a little bit more, but we are closely in the same bucket. So when you look at Uganda and you say Uganda has now these people moved to have formal financial accounts, the same you find in Ghana, you find in Cote d'Ivoire, because the players there, mobile players and the banks and other fintechs have been part of the movement that is spreading financial inclusion, and they're taking the journey to the next level. Then now you look at the next stage, whereby after you've done the start, or I could say the basics of financial inclusion, then regulation comes in. Like Uganda has just passed the National Payments Act. So regulation is coming in now. Regulation comes in for the good. For the good of ensuring that the players can be competitive, they can be sustainable, and the consumers are protected. So regulation comes in. So we're now just in that journey. There were guidelines before, like from Bank of Uganda and UCC on things like mobile money. Banks had regulation definitely, but now the act is just coming in to regulate the new players in financial services, the fintechs. Regulation is coming in. You will see the same across Africa, whereby regulators literally in many parts, countries, apart from a few, left innovators to start with these ideas, move, learn along, manage risk. Then after there is a proper view and assessment, then they decide to say, you know what, now the regulation should say so-and-so is the authority on overseeing fintechs, so-and-so is the authority in ensuring consumer protection. This agency is in charge of competitive tendencies. So that is now starting to come up. Now, as that comes up, of course, there is the growth is not stopped. The innovations are still coming in. You see very many young people coming from universities doing financial services from a fintech perspective, doing products from the industries like I mentioned. You can do something for agriculture, for education, for health, and then bundle this together with payments and mobile money. So we're seeing those innovations coming in. There are so many brilliant ideas that many young people do have. And like what I said earlier, sometimes you put up something like we put up mobile money with an intention of, say, payments, P2P, and then someone comes up with a different idea and then they use it for payment that you didn't intend it. Then you realize, oh, you can actually do that. Do it even better. You have mobile money, you see someone comes up with something called safe border, for instance. And then, safe border starts, borders are being paid digitally, and then it evolves something else. It evolves to a wallet, whereby these border people are saving money, they are borrowing. It evolves to full e-commerce, whereby now you can
buy a Rolex
through safe border. Exactly, you can order for your Rolex through safe border. So there are all these evolutions. The starter of this idea never anticipated that. But the people that now start to realize the market needs and are working along providing solutions start to get all these brilliant top applications around the best idea. So we would be seeing that quite a lot across Africa. Then there is the element of saying that we are at the level whereby we haven't yet connected everything together. Like there has been a talk, for instance, on the internet where they talk about Internet of Things, whereby everything is connected together. I could sit here, my car is out there, I can just say, okay, talk to my phone, say lock car. The phone is connected to my car, it will lock. My gate is somewhere out there, say, oh, lock the gate. The phone is connected, it locks the gate. So, or you coming through it, say I tell it open. Now, these are being talked about from Internet of Things. What we do have from a financial perspective is that even payments should now be looked at in that perspective, whereby I should be able to say, okay, I tell my fridge, order for my groceries. Now, the fridge orders for the groceries, and the groceries have to be paid. Now, if the groceries have to be paid, even payment should be connected from my fridge, my phone, my other devices. The payment should also be connected. So the fridge doesn't need to ask me to be like, okay, how much do you have in your account? It should be able to integrate with APIs, with some intelligence, and know, okay, I have enough balance. Maybe I provisioned, I provisioned and said 10,000 every month to be for groceries, 20,000 this. If it realizes that, okay, 10,000 for groceries, should come back and tell me, you know what, 10,000 for groceries was re-budgeted or spent on something else. Do you accept that we use 10,000 for fuel to do this? That kind of intelligence. Okay. That's where we should be going.
That would be interesting.
Now, of course, that sounds like we are far away from it. But if you sit within a technology front, where I've been lucky to sit, I've seen these demonstrations of products like this. When we can be able to get them to market, it's still subject for trials and testing, but we are going there. Okay. We are going there with that element of connected payments. Now, market specific and region, we do have the case of interoperability, whereby you still have movement of payments, movement of money that needs to be made interoperable. In a sense that if you look at a merchant store where you're going to pay for your groceries, I could be having an account at a bank, another person has the account via their telephone operator, another person has an account via another fintech that is allowed to have e-money. Now, when you go to pay for your groceries, you don't want to be in a situation as a merchant owning this store. You don't want to be in a situation whereby you need a channel for each of these. You want one channel whereby someone who wants to pay via from their bank or from their telco operator or from their other fintech holding a store of value will go through this very same channel and make the payment. So that's now a level of interoperability. So there should be interoperability at the channels, interoperability at the payment instruments, payment instruments like mobile money and debit credit cards, and then how the money moves at the store, a store of value. Now, this interoperability element is very important. I'll give you another example here. If you just look at the movement of money, why we've digitized banks in their own kind of, I would say, silo setup, have made their own channels, telcos have made their own channels, other fintechs have made their own apps. Today, if you want to move money from bank A to bank X in the same country, like Uganda, people have actually tried whereby moving money from bank A to bank X, when I'm doing it from a bank, is in some cases taking hours or a day. In some cases, not in all cases. Now, then someone realizes to be like, okay, if I move this money from bank A and move it by mobile wallet, it will take me 1 minute to do it via push and pull. Then I move it from my mobile wallet and move it to the other bank. Again, it's 1 minute.
It's quicker.
Exactly. So then someone realized, oh, you know what? Instead of moving it from bank this directly, now I will take it through this channel. I move it to maybe my mobile money account and then move it to the bank, which is good, but it comes with a constraint that you as a consumer are now having to pay costs 2 times.
From bank
to wallet, then from wallet to bank.
Okay.
Now, that's where the element of interoperability comes in, whereby all our financial kind of players, those holding store of value, should be able to be connected to something like a national switch, whereby I don't need to do this kind of going round. My bank connects to the switch, I initiate the transaction, and then the transaction will reach you in real time. Now, there's been different development partners, like the Gates Foundation, which has what we call level 1 principles. They've put forward guidance for like real-time movement. So you need to be able to move the money real-time for the people. Now, why this is very important, especially for the bottom of the pyramid, because if I have a sister somewhere in Masaka who is having a small business, they are many times running with capital for the day.
Yes.
So if I decide that, you know what, my sister tells me that I'm short of 100,000 for my stock today, she doesn't have the luxury of waiting for another day to have that money. So if I want to move it to her, I need it to move in real time, so she can be able to get the groceries. So interoperability in this case, movement real-time kind of money transfer is very important, especially for the people that we call bottom of the pyramid.
Yeah.
It may not be so important for big transactions between a big telco and a big bank, a big airline and a big supplier.
They can afford to wait.
They can afford to wait for 2 days because they're dealing in big chunks of money. But the bottom of the pyramid person needs this money to move in real time. They need what we call same-day settlements. So foundations like the Gates Foundation under Level 1 Principles has put forward what we call design principles for financial systems that include everyone. These are called real-time payment systems that are being built by different fintechs. The element, the keyword there is real-time. The whole mind is all framed around real-time. You want people to move their money, either transfer, payments, in as close to real-time as possible. Same-day settlements. You've collected some people, merchants, payments for the day, they need to stock tomorrow. Move their money by tomorrow, give it to them. So this is something that we still have a lot of work to do. There's so many value creation ideas that the youth, the fintechs that want to explore financial inclusion can come on board to look at how do you do real-time payment systems. They could be national switches, regional switches. They could be supporting fintechs to integrate within these solutions. It could be how do you build applications on top of this. You are building insurance applications. You want to take an insurance policy that tomorrow when I have a problem, I don't have to wait for 3 days for the policy, because those are some of the reasons why Africans have not had much trust in insurance. I mean, I have an immediate need, and then you're taking me through a process that is seeming that you're actually deliberately delaying me for a week. So people want to be able to get that trust that I will take an insurance policy through a digital platform, and then when I need it, maybe an hour process, and then I get the payment done. So, and all that would be facilitated as applications when you do have real-time payments. So the insurance, whatever the bank it's working with, when it says, you know, I will pay you from bank X, you have to receive your money through maybe the mobile wallet that you do have with your telco. It comes in real time. It doesn't have to wait for a clearing at the end of the day. So this evolution around interoperability is something that we are on the journey for. A lot needs to be invested into it, but it's worthwhile if we're going to enable the bottom of the pyramid to get more value within what we call financial inclusion.
I think from most of what you said, it appears that the financial technology has a huge role to play in financial inclusion. From literally everything you've talked about is the financial technology kind of innovations that are bringing in the people at the bottom of the pyramid.
Yeah.
But then you also mentioned the issue about regulation. You say now even Uganda is just coming up with regulation to regulate this digital financial services in a way. So do you think that we should have regulated before, or is the regulation coming after, or after people have done these things, better in that it allowed us to be as open and innovative as possible?
Yeah, I think we have the right setup. The regulators have provided the right environment, whereby regulation is supposed to be proportional. Now, for it to be proportional, you need to understand the environment, the complexities under which you're operating, for you to have a rational view and a proportional view to regulation. Now, it has taken 10, 15 years Earlier there were guidelines, like in Uganda, and many markets have had guidelines, but not necessarily acts. Now, the regulators and all the players have learned over this period of time, how do these digital financial platforms work? How do you ensure you give the benefit to the people without putting them at risk? So there have been learnings. Now, with all these learnings, now a regulation comes in that is better informed. It would have been catastrophic if the regulation came in before without even understanding the context. Countries that put regulation first across Africa, many have had very slow progress on financial inclusion because they put in regulation that wasn't enabling. They put in regulation that was restricting non-bank players. Non-bank players here includes things like telcos, like a fintech that comes in that is not necessarily a bank. They put in regulation that was very restricting of this. Now, because of that, they've slowed down the inclusion of their people to for more finance tools. They are realizing now that maybe they need to open up. They need to look at this thing differently because the regulation they put in was prohibitive. So to your question, I think a market like Uganda, it's been the right thing to let the industry start, grow, learn, give them guidelines, engage them. Then once we are reaching some level of maturity, then come with this act that now formulates everything, puts clarity on who is the regulator around this, how do we manage consumer protection, how do we manage competitive tendencies. So now that's coming up, but it's now better informed than if it had come in 15 years back.
When they don't even know what it is. Because I think actually 15 years back, no one knew how far this would go, even the journey you just talked us through, where
exactly.
products have been developed just out of need, out of ideas. So maybe they would have constrained that particular process.
Exactly.
So if you project into the future, what is the outlook of digital financial services and mobile financial services?
The outlook of digital financial services is very bright. But before I can talk about it particularly, I would look at it from what's the outlook of Africa people from social development perspective. Because whatever we are doing, at the end of the day, whether I'm doing it digitally or non-digitally, all I want is a better life for me, my family, my people. That's the bottom line. So we have to look at the outlook in this context from the social perspective, social and economic perspective of our people. Governments, development partners like NGOs are all interested into this. We've had things like the development goals, put 2020, 2050, what needs to happen, whereby you're looking at economies where you have people that have been educated, where people have access to health services, where you have the right infrastructure for roads to move produce, where you have the good support systems like judiciary in case there is kind of conflict. Conflict is part of society. So the bigger social outlook for Africa, it still has so much desired to be done by everyone. But it's bright. It's bright because we have a young population, which young population, if well nurtured, if well supported, will be up to a very productive Africa. Now, when it comes to financial technology as something that puts all this together, the outlook is definitely bright, whereby we're looking at what we call a platform economy. A platform economy is now an economy that has what we call network effects. Network effects, I'll give you an example. You see something like Google, Facebook, Airbnb, Uber. These are platform businesses. What they do, at the start, they realize that, okay, Facebook, I have someone who wants to talk to 10 people. I do connect them. Once I've connected them, they start to create value in their communications. Once they start to create value, the network grows. As the network grows, then more additions come on top. People realize that, you know what, now I can do business. I need to sell my spare parts. I put up a Facebook page, and then people get to see it. Get to see it because now you've built a network effects. Airbnb for housing. People were traveling and looking for housing, affordable housing. Of course, hotels have always been there, but then this Airbnb comes and it's like, you know what? I need to connect consumers and the suppliers. Yes. I bring the people who have the houses, let them put their houses. I go through a process of quality control. Then you come, I connect you to, and then you're able to get an affordable housing, not necessarily in a hotel in some cases, but you get something good. So it grows very fast as a platform. At the end of the day, after 5-10 years, you see it is all around the world. You look at things like Uber, Taxify. There are even some Ugandan versions of these applications. They realize, okay, there is a market need for people who are moving. Get this network together. Get the drivers, get the consumers, connect them. Here the element is make the right connection. Once you make the right connection, then you will create the value. Because if you connect, say, a Uber driver who is in Kampala and connect them to a consumer who is in Jinja, it won't be the right connection because it will take them an extra 3 hours to get there. Now, put in the right technology, the algorithms to get the right connections. Then people will start to see the value being created. Now, platform business is what now financial technology is about at the moment. Financial technology is also now moved by the concept of the platform business, whereby if you look at what we call agents banking, you have agents out there. Mobile money, you have agents out there. Now someone needs to make a deposit. They need an agent, maybe a nearby agent. They will go there, make that deposit. Then they can be able to come either to a platform that is e-commerce or just on their own menus, make a bill payment. Now, the economy of scale here is within the network. The more the agents that you do get, the more access points, the more value you create. Because then I will know if I'm traveling to Kabale today, I don't need to carry my 1 million. I put it on my mobile money because I know if I go in Kabale, if I want to cash it out, I will find an agent. Now, that's where we are. But like what I said earlier, I even want to move away from that level whereby I go to Kabale, I know I want to get brew from Kabale or Irish from Kabale. I have my 1 million in my wallet. I will pay the gardener there, the farm manager there. I will pay with my mobile and then carry my potatoes, my Irish, and bring it. So that's where we are going. So to your question again, I see the future that we do have is an evolution of the platform business. Platform business, in this case, being financial technology that is having roots of platforms, network effects. Then there is the element of what do you need to make these platforms effective? Technology in itself is evolving. Evolving in a sense that you want to always have a technology and a business which you operate at costs that make business sense for you and affordability for the customer. If you recall, we said earlier, one of the elements of financial inclusion is the affordability. You don't want to be in a business whereby you're putting out services that are too expensive. People won't use them. And I mean, you'll be out of business for a short while. So as you're doing these platform businesses, technology that is cost efficient, so elements of things like cloud do come in, cloud computing, whereby you're getting banks, telcos, fintechs, making use of cloud technology to host their platforms and to have more modern platforms. We do have elements like what we call API, an API first approach, whereby you want an ecosystem for people that connect in much more easily. for you to get access and maybe do a service on top of a Bank of Uganda application like this, the Central Deposits application, or the clearing house. You may not, right now, you may not have an API to it. But the evolution should be, once you do like a national payment switch, or you're a bank, you're a fintech, you have an API first approach. You are exposing APIs there in the right technology, REST formats, for fintechs, for consumers to easily connect to you. So we see this evolution, whereby
for a non-technical person, you're talking about developing technology that is open for anyone who in future can connect to.
Correct. Okay. So we are looking at open technologies. Open technologies, but principally here are open APIs. Open APIs publicly exposed. So I know telcos have started this already. Some banks have. Some regulators have mandated it to try and open it. Like in Europe, there's what they call open banking, whereby you can be able to access via an API data around transactions for a customer who has allowed from any of their banks. So that's open banking.
In the Ugandan Act, do we have that?
The Ugandan Act is not explicit about that, about open banking. It's not explicit about that, but the innovations that coming in from the financial technology players are moving in that line, whereby you're seeing openness of APIs. So to say cloud, APIs, then you have evolutions like with artificial intelligence. I gave you an example whereby I should be in position of telling my fridge
to order
order this. It needs some bit of artificial intelligence. And also importantly, artificial intelligence, there will be many use cases. Transaction cases, there will be cases of just understanding people behavior in relation to fraud. You want to be, because there's going to be a lot of data that is moving within these payments. Now, all this data needs to be understood, which is very hard by me and you, individuals, to crunch numbers, to crunch movement and relations within data that is, say, 8 million transactions every day. Now, artificial intelligence comes in. It can help us to be like, how effectively can I look at Damali in Kabale doing their small business, doing these transactions, and how effectively can I find their relation and their trust and be able to say, you know what, Damali, I don't need you to sign a paper here. I will give you the $50 that you need to do your stock. Now, artificial intelligence helps that, gives you the level of confidence that you've seen Damali's movement data for transactions over the last 1 week, 1 month, 1 year. We can tell you by with confidence, 90%. You can trust to give them give Damali $50 and will be paid. Artificial intelligence comes in, and we're going to see a lot of evolutions and applications that come in to use artificial intelligence. All our fintechs will have ideas in how do you use artificial intelligence for this. There is what we call RegTech. RegTech, which is more regulation technology, whereby you have regulations coming in. Regulations require compliance, because the regulation will say, okay, at the end of the day, I want you to tell me transactions of people that maybe haven't transacted in 1 year, that came in with amounts greater than this, and all that kind of thing. You need technology to quickly crunch your numbers, your data, and then satisfy compliance. Be able to tell the central bank or whoever is in charge of supervision for the financial institutions to be like, you know what, as part of compliance, I'm expected to give you this information and I timely deliver it.
And it's just using the system's data.
Exactly.
And
so RegTech, things like in Uganda, we've seen national ID. How does a national ID system become effective to not exclude, to be more inclusive, whereby you want this national ID system to be accessed by a small fintech that is lending Damali or lending me by someone else. How do we evolve to get this kind of technologies to be accessible? We are at some stage, but we have many steps to go for this kind of regulation-related kind of technologies to also be in place and to be accessible with the full value that you want to include everyone. You don't want to be in an expensive kind of setup whereby each bank is still doing their KYC, each fintech is doing their KYC, each telco is doing their KYC, and I mean, all that is money being spent, which could have been put to more value elsewhere. Not that it's bad, it's just that these are the steps we have to go through to the level whereby we get all these things much more simplified. You have one single point of identification for a bank, for a telco, for another service provider. We are at a journey to get this. And like I said earlier, when I talked about AI and all of this, data is at the center of it. So data technologies are going to be evolving to make sure that we can do all these things much more better.
Okay.
Yeah.
Well, Mark, it's been really, really educative. Thank you. Do you have any last words for that?
Well, I'm very glad to be part of the Ideation Corner.
Thank you.
Personally, like you did the introduction, I'm very keen on our financial inclusion, things that better the lives of our people. It can be outside financial inclusion, but I always see an angle how all these things tie back to enabling finance technologies. There are so many opportunities out there for our people, the young people that in schools, in graduating, there are open APIs. A child who is interested in technology can always look out for the open tools, open APIs to test at university, in secondary. So there are opportunities there for children and for fintechs. So this should be explored. All the ideas that our people do have are good ideas. It's only an element of go the extra mile. Don't just have the idea and then someone implements it tomorrow and then you claim, no, so-and-so stole my idea. We see so many such cases. So what should happen is that have your idea, go the extra mile of investing your own time, your own resources wherever possible, look for colleagues, look for partnerships for you to realize this idea, to try it out. Even if that doesn't become your ultimate end business idea, it helps you grow. At the end of the day, once you've done 1, 2, 3, 4, 5 ideas, maybe your 7th idea is going to be the biggest that will give the world a change, your community a change, and your own self a change. I do encourage all of you to be part of this.
There you had it from Mark. Please don't die with your ideas. As he said, please test out your idea, work on it. In regards to financial and digital inclusion, apparently there are open APIs out there. So if you have any idea on how to implement it, please go ahead and do it. Other than that, thank you so much, ladies and gentlemen, for watching the Ideation Corner. Please subscribe to my YouTube channel.